There is one stock that is about to skyrocket. The company is getting 30% of its revenue from power generation. A big portion of that is related to data centers. Data centers need a ton of power. We need a ton of data centers to build all the compute for OpenAI, for Meta, etc. The company is Caterpillar, ticker symbol CAT, and it's not the Caterpillar of dump truck or backhoe, basically, imaginative, association. This company is very much in power generation, and you can imagine you need to build out big engines for big trucks, and they can build out big engines for power generation, turbines, etc. as well. So the company is much more acclimated to AI than you might expect. So they had $17 billion most recently in Q3. The earnings reaction is super solid. It's holding up well. It's a 10% year-over-year growth, which is not incredible, but it's solid. And then they also have a $40 billion backlog. So that's a big deal, giving them a runway of the growth story, really, is what it is. Putting them squarely in the hyperscaler, power generation, data center conversation. All these data centers have to be powered and built out, and Caterpillar is going to help with that. So they do have a collaboration with Vertiv as well, ticker symbol VRT, which is a power company. And Vertiv has been working to build 800 volt connections, basically, with NVIDIA. So indirectly, Caterpillar has this NVIDIA connection, which is a big green light for their growth prospects for the coming 5 to 10 years. And there's one other company I want to touch on. It's Keysight, ticker symbol Keys, Keys, where if Caterpillar is not really your thing, I know these stocks move slowly. Keysight did recently have earnings, so certainly moving quickly right now. And the earnings were solid. Pulled back a little bit of profit taking, but it's at a really favorable level as of the time of the recording of this video. So take a look at Keysight. It's sort of a 5G wireless scientific instruments play, which has a little more of a evergreen revenue stream, versus Caterpillar might be a little more tied to, is everyone going to want data centers, or is anyone going to want data centers in their backyard? How easy is this permitting going to actually be? Are they going to have to make contracts with Alberta, the Texas of Canada, to build these data centers, and then, get the power, get the compute connected back to the US? We're going to see what's going to happen in the next few years. Right now, Caterpillar looks interesting, but if you want a safer play, in my opinion, with a clear risk level, Keysight is also in the conversation, Keys. So let's jump into these two tickers, starting with Caterpillar. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So Tamagotchi in the chat on the live brings up an important question too. How do changes in the housing market affect Caterpillar with potential recession territory? Are they still worth it right now? And I would say, well, I think the chart itself shows that they're pretty strong after that earnings reaction is holding. A lot of other companies are not holding. And then if we look for recession territory, sure, maybe we're seeing some selling off in NVIDIA, even as solid earnings and sales come out. Same with Palantir, selling off even as those earnings per share is a beat, and the pretty much top of the market, it seemed to be marked right about there on November 3rd so far. But we're coming back, and there was talk of that rate cut happening in December now, higher chance of it happening. And home builders are moving up on that XHB. So stocks that are helped by rate cuts, which is basically, the housing market, are performing well right now. So there's always going to be changing housing market factors, but right now rate cuts is not one of them. And I'm not really sure this company is that dependent on the housing market as compared to the power generation market, as I previously used to think. I mean, this is Vertiv. This is the power company holding up right now in CEG. I mean, these energy companies coming back a little bit right now. If we just look at energy as a whole, sort of sold off in the past week and a half. But right now, Caterpillar looks good. So it's a long-term play, I don't know. But as far as buying with a 560 risk level, looking for a 5 to 10% move, I think this is definitely one of the best plays to do that. And 5 to 10%, you know, just as a little reminder for people who are new to the channel, it's no joke. I mean, this is a 2 million share, $500 stock. So 2 million times 500 is $1 billion. So someone theoretically, not saying this is anyone who's watching, but could take a position that's 100th of that, which is, you know, 10 million, drop it in, click of a button, not even move the stock at all. You know, there's a, whatever we have a $3 spread, but it's after hours right here. So that's going to super narrow. So you basically risk $1, you look for $30. So pretty exciting, even though 10% sounds like nothing. Here's that revenue, up 10%. Earnings per share beat. Backlog is near record 40 billion. And they are shifting towards energy and data center demand. So, you know, this is the boring way to look at it, bulldozers and mining. But it brings up a good point in the chat as well, Tamagotchi, of they are probably building out big housing developments as well. I didn't see that right here. But I do think that this collaboration is a big, big deal. Power and cooling for data centers is going to give them a seat at the table with basically NVIDIA's partners, which Vertiv is. And they've got some institutional recent investment. 70% isn't crazy, but I'm also not too worried about that. I mean, Keysight is 87%. This is a $200 billion company. I mean, we can look at Vertiv as 70%. I mean, it's not institutional ownership, I don't think, tells a story for these non-biotech, non-healthcare stocks. So I wouldn't even really worry about that too much. It's like when, you know, Michael Burry does this or Kathy Wood says this. It's like, yeah, it's fun to talk about, but it's not really always that fruitful or constructive. So looks like there are some tariff hits as well, and we can see that in the chart, I believe. Definitely followed the market with a massive rebound. But it seems like its stock's doing super well, and it's important to look at relative dollar value. I mean, $7 million of CAT shares is just not a big deal compared to the market cap of the stock. So I think this power generation move is a big deal, literally. I don't think they've announced any actual numbers as to the size of this deal that they might be getting with the data center partners, but Vertiv has collaborated with Caterpillar, and NVIDIA has collaborated with Vertiv, so indirectly, that's the connection to Meta, and we'll see. I don't think there are. I mean, ChatGPT is, you know, helping us out here, seeing if there's further connections, but I don't think that there necessarily are any further connections than have already been mentioned. I'm sure Caterpillar would have announced them. It's just the strategic collaboration on November 18th. And if we look at the stock to sort of see if that made a dent in the actual stock price, well, that was actually so recent. I'm not sure it's even really fully baked in. November 18th is just right here. So it definitely marked a nice bottom if that was the case. So see if Vertiv stock went up as well. That's a good sign if it did. Kind of just followed the market. This is the 20th, was a big sell-off day in the SPY. So I wouldn't look too much into that collaboration date specifically, but it's just a actual evidence that they're actually connected to NVIDIA in a way. So we'll see if more big deal numbers come out. There have been big deal numbers released about subcontractors, you know, hundreds of millions of contracts for subcontractors building out data centers. These subcontractors, some of them are publicly listed, worth billions of dollars, and they're buying electrical companies worth, hundreds of millions. I think, if I'm not mistaken, CRS might be in that conversation, and other stocks that it's doing pretty well. So we'll see what happens. And I do think there are other sectors that are interesting. I mean, we talked about drones earlier in this live. O&DS is certainly in that conversation, but the other drone companies, chips companies, are just selling out. This is just an example of one that's had a lot of euphoria recently, GSIT, that has just shown no sign of a bounce. It's sort of in the same conversation of UMAC and Red Cat, unfortunately. So unless it has, more news, you have to sort of leave it to the wayside and focus on these big multi-billion-dollar companies. So that's the Caterpillar story. Let's move on to Keysight. We can't just dominate the conversation with this one company. I mean, there's companies coming out every day with earnings. It's kind of the end of earnings season, but this is a solid reaction. A little bit of profit taking is completely normal. And I do think that this company could turn up. It could hold this $200 psychological level. If it just gets above there, that's a really solid level to risk off of. Look for 220 as a profit target, risk a few bucks, and you have a $30 billion company that has solid earnings that you can look to take a position in. And this company, Keysight, does have a connection to basically 5G, 6G. And yeah, I mean, nothing makes sense in this market. Palantir sold off on earnings. Google is doing excellent on earnings thanks to Gemini, but Nvidia sold off. But here's a company that came out with earnings and $1.5 billion, almost $1.35 billion, up 10% year over year. Almost $300 million of cash flow, so that's super strong. And I think these are some decent plays. So here's what you got to look for, right? I mean, I'm not Oracle, right? But I can say, if we look at Oracle, this company has done horrible as an example. Okay, so some of these companies that have the biggest OpenAI deals have just sold off. Walmart has been the exception. Seems to be holding up. Earnings is doing well. Money actually flowed into this, even as it flowed out of the market on that sell-off day on the 20th, which was really rough. I know it's hard to see it because now we seem to be in this sort of bipolar market. We're up 4 days in a row, and everyone's hunky-dory again over this liquidation crypto day on the 10th. But just 4 days ago, we were worried about, a big move down to, a lot of people were worried about a big move down to pre-tariff levels. So right now we have to sort of look at what's in front of us and say, is there another Guardian Health that's going to happen? Is there another GM earnings move that's going to happen? Now, of course, there have been their share of earnings misses, Netflix, SMCI, and at the same time, some companies have had big growth. I mean, ABAT, solid earnings. I mean, certainly, that was a while ago. The most recent earnings was a sell-off, so that's actually a terrible example. But AVGO is a better example of most recent opportunity to the upside, really driven to that back of that Google move. So that's sort of what we're looking for. Any connection to Google, any connection to Nvidia, which Caterpillar has through Vertiv, and any connection to a really solid earnings result, which this is really solid. It's a beat on earnings per share. It's a beat on sales. It's a increased guidance. It's basically everything you could ask for, aside from a 50 to 100% growth on earnings, which is pretty unusual. So the benefit of these is you don't have to say, is 5G an investable category? Is IoT an investable category? Even as AI seems to dominate, is lab test equipment, infrastructure, equipment that goes into data centers? Is this exciting semiconductor test tools? That's basically what this company does. It's basically like a lab supply company for the big tech companies or the big tech adjacent companies, Nvidia, some of these smaller semiconductor stocks, which have been doing great. $4 billion revenue in 2020. That was years ago. I'm gonna be honest, I don't really know what's going on with this company specifically, besides that it has great earnings, and it's really hard to find other companies that have great earnings right now. I mean, I know these other companies, Teradyne, they've been doing solidly, and then National Instruments, we all know because we use them for our calculators in high school for math and stuff, but Teradyne's doing awesome, and earnings is holding up for sure. It just kind of had an ugly day here, so it just seems to make more sense to find a stock that closed right here at a level. You can buy above that, and you get the risk is $200 level, so it's kind of a less fundamental, more of a technical play. So that's the idea, along with Caterpillar. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. If you want to participate in the live, which folks have been doing, this is live right now. Of course, the recording will not be. Watch for the live and join in, ask some questions. And if you want a free course, hit that subscribe. You'll get that how to buy stocks before they go up course, posted once a month in the YouTube posts for subscribers. I'll see you in the next one, and check out that $19 Cyber Monday deal to ask all the questions you want. 7-day trial, and the testimonials are pretty good. I mean, the results were pretty good to get those testimonials. So the market is never totally sensible, but seems to be bouncing back. So head over to stockscommunity.com if you're interested in that. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.